Let's talk about one of my favorite semiconductor companies, Taiwan Semiconductor, TSMC. Just reported their fourth quarter results. We've got their guidance going forward. We know what's going on in the semiconductor industry. It's a stock that did really well in 2023. How much of the future results are already baked into the stock price versus opportunity for investors? I'm Jason Hall. This is Investing Unscripted. We're going to take a look at it right now. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should check out our special link. Go to fool.com/unscripted. Motley Fool is going to give you its 10 best stocks to buy right now. Please check out that link after watching the video. I'm going to share TSMC's fourth quarter results, set the expectation, see where the trajectory is with their business, cash flows, all of the things that are going on with the business that are so important to know. Let's start right here. Some of the numbers we talk about might see them in new Taiwan dollars, the native currency. But in a lot of their presentations, they give us the numbers in US dollars, so it just makes it easier. $19.6 billion in revenue. That was actually down a little bit from the fourth quarter of 2022, but it was 14% up sequentially from the third quarter. So again, the semiconductor industry, besides the super crazy bright spot of AI demand that's been wonderful for Taiwan Semi because they make NVIDIA's chips, that part of the business has been really good. The smartphone business has been pretty weak. Desktops has been really weak. Automotive has been really weak. We'll talk about a little bit of that later, but this is, again, the seeing it from the prior quarter, revenue going up, that's a really positive thing. We're also seeing some stabilization in gross margins, down still pretty substantially from last year, but starting to stabilize a little bit, 53%. Operating margins also starting to stabilize. It was above the high end of their guidance, which is really positive. Good net margins. So again, on a sequential basis, the numbers look good. Those margin numbers are still down from last year, but this was expected. The company's plowing a ton of money into capital expenditures, and some operating expenses are coming online, some cost of goods. Things are coming online faster than volume is ramping up enough to really get to the operating leverage and the high margins that we've seen prior. So it's not abnormal for the company to go through these periods where we see kind of ups and downs with the margin profile. And this is a period where we're starting to see things are starting to revert back to that higher mean as we get through the downturn of the cycle. Let's talk a little bit about where the money is coming from, where the chips are that are being made. So fourth quarter results, 5 nanometer continues to be a massive part, and 3 nanometer is really starting to take more and more space in its manufacturing process as faster and more advanced chips are coming out. We can get a comparison to the full year to the quarter. I want to do that first. So again, 3 nanometer, 15% of the quarter. It was 6% of the entire year. There was 0 in 2022. It just came online a couple quarters ago. 5 nanometer also increased to about a third of business versus just over a quarter a year ago. This is what TSMC does really well. They make the best chips. They get them online faster than anybody else, and they get them to volume faster than anybody else. So that's why their contract customers use them. Platform, this is really important too. High performance computing, this is mostly where the AI stuff lives and the data center stuff lives. So 3% of the business. Smartphone business in the quarter was 43% of the business as well. So those are the lion's share. Automotive, still pretty small. Internet of Things. If we compare that to the full year, I think this is really important. Internet of Things was 8% for the full year, but only 5% in the quarter. Automotive is slipped a little bit, but smartphone revenue in the quarter is growing. So that's a good sign. The smartphone industry is maybe coming through its little period of downturn and strengthening a little bit. So that's good. Growth rate was 27% in the quarter versus a down full year. So that's a real positive for the company. Not much to really talk about on the balance sheet. Plenty of working capital, tons of cash. The business is very strong. In that regard, they can continue to invest for the future while also generating lots of cash flow today. All right, let's talk a little bit about guidance. Set the expectations going forward. So management's expecting revenue between basically 18 to 19 billion US dollars for the quarter. If we go back to the fourth quarter, just under $20 billion, 19.6 billion US dollars in the quarter. That means we're going to see a decline, a little bit of a sequential decline, but not a big surprise. A lot of business happens in the fourth quarter. First quarter is usually a little bit slower on a seasonal basis. So this is not abnormal, but this is good. Gross margins and operating margins, we're starting to see better numbers here. So 52 to 50, a little bit higher. But if they're at the high end of the guidance, they're going to be better than we saw in the fourth quarter, and operating margin starting to move higher. So some positive things are happening there. Okay, so we've laid the groundwork for how the business is performing, what we're seeing with margin profiles and that kind of thing as the cycle's starting to turn, getting some ideas of what management is expecting for revenue to kick off the year and their expectations going forward. Numbers look pretty good there. Before we talk through valuation, there is one more really important thing that is happening with the company and its management and its board of directors. I think it's really important to talk about. Dr. Mark Liu was co-CEO of the company for a long time, has basically been there since the founding, really critical key figure in the building and the operating of this company for many years. He and the current CEO, C.C. Wei, were co-CEOs for a long time. They replaced Morris Chang, the founder, as co-CEOs when Morris Chang retired as CEO and just became chairman. More recently, Mark Liu became just the chairman and stepped down as co-CEO, and C.C. Wei became the CEO. Now, what's happening is Mark Liu he's leaving the board completely, and it is expected that C.C. Wei is going to be named as the chairman. This has been rumored for a while. It's only been, it hasn't been that long since we saw the change and he became just the CEO and Mark Liu became just the chairman. So this is playing out quickly. Not a big surprise for people that follow the industry really closely. Why are we talking about it? Because whenever you have a major change and you have somebody that's a very long tenured person that's played a really important role directing the company strategy, and you have a hand on the pulse of the business, setting the strategy, somebody's been around that long that knows the culture of the business, understands the industry as well as he does. This is an absolute expert in the industry, one of the founders of the industry. There's no hyperbole there. It's a change that we need to focus on and watch. We need to see how things play out with the business. It's also going to be interesting to see how long C.C. Wei, somebody else has been there for a very long time, how long he's going to want to remain as CEO and chairman, or if there's a succession plan that's in the works. I'm sure there is some, but when is that succession plan going to play out? And is C.C. Wei then going to just slide into executive chairman role, and we're going to see someone else come in as CEO? That's really important to watch for a business like this. Just important to keep an eye on. That's a thing to watch. We do want to talk about valuation. Is this a time to be thinking about investing, buying more shares in, or maybe opening a position if you don't already have one in TSMC? So stock right now, about $103 a share. Great year last year. Stock is up almost 38% from where it started 2023. So it's done really well. The semiconductor industry didn't have a great year. TSMC had a pretty solid year based largely off of its partnership with NVDA and the growth and proliferation of AI. Share price doesn't tell you much. You look at that and you think it's up 38%. Maybe that sounds expensive. You go back a few years ago, yes, it's still down from that kind of that tech stock bubble, still down from that peak. So we don't want to anchor on either of those prices. I think a better thing to do is let's just talk about some good valuation metrics. On an earnings basis, trades for about 20 times earnings. And I think that's a pretty reasonable price to pay for Taiwan Semiconductor. If you look at price to free cash flow, it still looks very expensive. And a big part of that, company's still spending a ton of money. We talked about on CapEx, expanding 3 nanometer, 2 nanometer is going to be coming before. There's a lot of money, capital costs to add the assets to be able to grow those parts of the business. We saw how 3 nanometer a few quarters ago didn't exist, and it's becoming more and more part of the business. They're spending money to do that, and that's less free cash flow. So I like to look at operating cash flow as a metric. So you see 13 times operating cash flow. So again, that kind of adjusts for the CapEx spend that's coming out of operating cash flow. So we don't have as much free cash flow left. 13 times operating cash flow and about 20 times earnings. I think the stock's pretty fairly valued, especially if we see continued strength in AI, which is likely. Eventually, demand is going to wane there. The gold rush we see right now of companies looking to invest tons of money to focus on things like the large language model training that we've seen. I think it could be a very long cycle before we see that start to ebb. We are seeing strength in smartphones start to pick up. That's a positive for TSMC. So you think about the catalyst for the business, you think about the valuation. I think right now TSMC looks really attractive. One thing to watch, again, what's going on with leadership? How are things playing out in the boardroom with C.C. Wei most likely succeeding Mark Liu as chairperson and Mark Liu completely stepping away from the business? It's going to be interesting to see how that plays out. And that's my one thing to watch really closely with this company going forward.